Hi, good afternoon. For our group assignment, we have chosen Petronas Vs Sapura Enegry to look through their annual reports and to see their performance. Our group is professional women. These are all the members of the group. We have Suhaila binti Abdul Kadir, Nik Hasma binti Abdullah, Aida Nur Nazifa binti Abdul Ghani, and Siti Fatimah Nur binti Hussein. So for this presentation, we are going to cover the stockholder analysis, risk and return, investment return, capital structure, dividend policy, valuation, and financial ratios. I'm Nik Hasma, and I'm going to start the presentation with Petronas Gas Berhad. On the company profile, Petronas Gas Berhad is incorporated in 1983, listed on the main market of Bursa Malaysia Securities in September 1995, and they have 4 segments of major business activities, which are gas processing, gas transportation, utilities, and regasification. Current staff strength is 2,187 employees nationwide. So let's look at the stockholder analysis. The company was initially the wholly owned subsidiary of Petronas, the Malaysian National Oil Corporation, which upon listing owns 60.7% of its shares, while the remaining 39.3% is held by financial institutions and retail shareholders. And from the chart, we could see out of 39.3% share that does not owned by the government, the highest share held by Pemodaran Nasional Berhad, PNB, with 9.44%, followed by Employees Provident Fund, EPF, with 8.86% of market share. This is the size of shareholding as of 30th April 2019. So we could see the highest falls under 1,001 to 10,000 unit of shares. Now we are going to look at the risk and return that covers beta, cost of equity, cost of debt, and weighted average cost of capital, WACC. Beta will indicate whether the investment is more or less volatile than the market as a whole. So from the table, we could see Petronas Gas Berhad show a beta of 0.72. This is lower than 1, meaning that the volatility of Petronas Gas Berhad, according to this measure, is lower than the market volatility. Cost of equity, which is the return a firm theoretically pays to its equity investors, like shareholders, to compensate for the risk they undertake by investing their capital. So for Petronas Gas, the cost of equity is 6.2, and cost of debt, which is the interest a company pays on its borrowing, it's at 5.22%. So how risky is the firm with respect to its equity and its debt? The company is less risk with respect to its cost of debt, as it is lower than cost of equity. The weighted average cost of capital, WACC, is the rate that a company is expected to pay on average to all its security holders to finance its asset. So for Petronas Gas Berhad, the WACC for the company is at 6.48%. That means for every RM1 extra funding Petronas Gas raised from investor, it must pay its investors almost 0.064 ringgit in return. We are going to look at the investment return. In financial year 2018, Petronas Gas Berhad has achieved high revenue of 5.5 billion with gross profit of 2.5 billion through additional revenue from regasification plant that was commissioned in November 2017. And I'm going to pass the presentation to Aida Nur Nazifa to present on capital structure, dividend policy, valuation, and financial ratios.
Hi, I am Aida, and right now let's us focus on the capital structure of the company, whether the company is funding through debt or equity. For Petronas Gas debt ratio is 27.5%, while debt to equity ratio is 38%. In other words, Petronas Gas has almost 4 times as many assets as it has liability. Therefore, we can conclude that 40% capital structure of Petronas Gas are financed through borrowing, whereas the large percentage, 60%, will comprise of equity. Next is about the dividend policy. For the past 3 years, Petronas Gas has returned about Rm 43.6 billion to the stakeholders. They also have accumulated total cash for 3 years is about Rm 7.87 billion, with average yield dividends are at 4.047%. Dividends paid are covered by earnings is 1.3 times coverage. For financial year 2018, dividend payout ratio is 78.7%, meaning it is higher distribution to the shareholders. Next, we're going to discuss on the valuation. Refer to the growth rate here, we can see that in quarter 3 2017, the Petronas Gas growth is at 0.13 and it increased until 5.09% in quarter 4 2017. Along the way, in quarter 1, the growth rate has decreased to 1.62% and it increased back to 4.62% at the quarter 3 2018. But at the end in quarter 4 2018, the growth rate is at 1.53%. Value of equity. For Petronas Gas, the market value is Rm 32.4 billion, which is bigger than the intrinsic value, which is Rm 12.15 billion. Meaning that the company has strong investment demand and it is leading to possible overvaluation of the company. How to enhance the value of the equity? The company may apply strategic planning and execution, continuous upgrading of manufacturing facilities, or enrichment of human capital. Let us look on the financial ratios of Petronas Gas. Refer to the table. We can categorize that Petronas Gas as a competitive and healthy business with high profit margin and operating margin compared to the industry median. Here we can see that the profit margin in December 2018 is at 34.7%, while operating profit margin is at 46.8%. They also have higher current ratio at 7.0%. It is mainly due to the higher cash balance. While for the debt ratio, Petronas Gas maintained at 0.27, which it is defined greater portion of asset than liabilities. Overall, Petronas have strong financial standing with contribution from the LNG regasification terminal in Pengerang that contribute profit about Rm 1.6 billion.
Hi, I'm Siti. I will proceed with the second company, which is Sapura Energy Berhad. Okay, a little bit on the introduction of the Sapura Energy. We know that before this, Sapura Energy is known as Sapura Kencana Petroleum Berhad, and this company is a leading global integrated oil and gas services and solution provider operating across the entire upstream value chain as compared to the Petronas that are more focusing on the downstream. And then the company has segmented into 4, which is the engineering and construction, drilling, engineering, and corporate. The financial year ended for this company is on 31st January for every year, and the company also made the prestigious Forbes Asia's Fabulous 50 listing for the second successive year. The company also operates in various geographical areas such as Malaysia, Asia, Australia, Russia, Americas, United Kingdom, as well as Africa. Okay, now we move to the stockholder analysis. Okay, from the table, we can know that the major holding of the stockholder in Sapura is the Sapura Holding Sendirian Berhad, which is 38.2%, and then followed by Permodalan Nasional Berhad, which is PNB, 11.1%. After that, Kumpulan Wang Persaraan, 7.62%, EPF 4.84%, and if we notice that there are also an individual shareholders in the company, which is Shahril bin Samsudin, that he owned 2.82% shares of the Sapura. Okay, next we move to the risk and return. In this segment, we will focus on beta, cost of equity, cost of debt, as well as weighted average cost of capital. Okay, for beta, actually, we managed to get the data from the infrontanalytic.com. So, it shows that the Sapura Energy beta is 1.06, meaning that it's slightly higher than 1. So, the volatility of Sapura Energy Berhad, according to this measure, is slightly higher than the market volatility. Okay, next we move to the cost of equity and cost of debt. For cost of equity, we using SML method. So from the calculation, we can determine that the cost of equity is 7.3292%, while the cost of debt is 5.747%. Okay, so if we compare cost of equity and cost of debt, how risky is the firm with respect to its equity and its debt? We can determine that the company actually is less risk with respect to its cost of debt, as the cost of debt is lower than the cost of equity. In other words, it means that the company actually managed to pay on its borrowing. Okay, this is the weighted average cost of capital, WACC. For your information, this figure we get from gurufocus.com. Okay, from that website, it shows that the weighted average cost of capital for Sapura Energy is 4.41, meaning that for every extra 1 ringgit extra funding Sapura Energy Berhad raises from investor, it must pay investor almost of 0.041 cent in return. Okay, now we move to the investment return. Okay, so from the slide, we know that Sapura Energy strategy in financial year 2018 is to strengthen their fundamentals by build up the technical capability and enter the new market. So the objective and strategy is to enhance the competitiveness for the future and to be well positioned and ready to capitalize on the emerging opportunities. So the group record loss before tax and impairment of 191.3 billion, mainly on the drilling segment, and the group has taken a provision for impairment on group dealing rings about 2.1 billion, and the group believe that this segment will take longer period to recovery. Although the record loss after tax of 2.5 billion, cash balance stood at 1.7 billion for the financial year. Okay, next we move to the next slide, which is the capital structure. Okay, from the slide, we know that the debt ratio is 68.5%, while the net debt to equity is 5.56 times. What does it mean? It means that the capital management refer to implementing measures to maintain sufficient capital to support the company's business and growth plans. The Sapura Energy capital management objective are to ensure the company's ability to continue as a going concern and maximize the shareholders' value. From this, we know that Sapura Energy manage and monitor their capital structure using a gearing ratio, which is a net debt divided by total capital. So based on the annual report, the group able to maintain a healthy gearing ratio at 1.56 times. Okay, one of the key consideration in this regard is to maintain ready access to capital markets and to preserve the group's ability to repay and service debt obligation over over time, meaning Sapura Energy Berhad raising funding from both capital market and also financial institution. That's all from me. I'll pass to Suhaila for the next topic. Thank you.
Now we continue with dividend policy. Since the company is making a loss in 2018, so there is no dividend paid out to the shareholder. The last dividend paid out is on 2017, which is 0.010 dividend per share. However, the company is make an estimation on dividend payout to its shareholder by increasing the annual income of 0.47% for the next year. Now, we continue with valuation. The growth ratios is on quarterly basis. From that graph, we can see an ups and down in the quarterly growth rate for the company. The lowest growth rate received by the company is on quarter 4, 2017, which is negative 22.52%. Next is the valuation of the equity. From the calculation that we have done, the market value of the company is Rm 1.73 billion, while the intrinsic value is Rm 1.53 billion. From these two figures, we can conclude that market value is higher than intrinsic value, meaning that there is a strong investment demand, leading to possible overvaluation of the company. This is dangerous to the company based on its performance of making loss for previous year, because market value could drop to lower price at any point of time. In order to enhance the value of this firm, the firm must improve its operational activities in order to maintain its value of the firm. Now we move to financial ratios. The groups recorded negative profit margin and low for operating and gross profit margin for year ended January 2018. According to Guru.com, based on the previous years, the Sapura Energy Berhad gross margin has been in long-term decline, with the average rate of decline per year is negative 26.4%, which gives warning sign to the group. For liquidity, the group current ratio is 1.02, almost to the group's median current ratio, which is 1.04, and with quick ratio quite low compared to the industry median. Referring to annual report, this occurs mainly from the mismatches of maturities of the financial assets and liabilities. To balance its portfolio, the group maintains sufficient levels of cash or cash convertible investment and raises committed funding from capital markets and financial institutions. A leverage ratio is the evaluation of companies' debt levels through debt ratio and debt to equity ratio. Sapura Energy Berhad debt ratio is 68%, meaning the group has higher level of liabilities compared with industry and considered highly leveraged and riskier. Contradict with net debt to equity, the group obtained its ratio above the industry, meaning that the group financing comes from creditors and investors, that as highlighted in the annual report. Inventory turnover measures how fast a company turns over its inventory within a year. For Sapura Energy Berhad, inventories are stated at lower cost, while for asset turnover ratio measures the value of the company's revenues relative to the value of its assets. It indicates the efficiency a company using its assets to generate revenue. For Sapura Energy, asset turnover is acceptable. That's all from our group. Thank you.